Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee with a daily update for the S&P 500 index. This was a bit of a nosedive today, and I think that it probably stays as playing maybe a deep retracement for this wave 2. Let me get rid of the lines. So last week we had a surge where price did a temporary piercing of the lower trend line, surged back into the price channel, and that likely placed the wave 1 completion. And then the wave 2 is probably occurring today. Now, if price goes below 26.90, then we have a different count. But until then, I believe this is probably a wave 2. And if it goes below 26.90, it'll probably be a different count with regards to reshifting the A, B, and C, making the C lower. Okay. But more importantly, if the price goes below 26.75, which is where wave 2 is here. So 1, 2, 1, 2. This was supposed to be a nested 1, 2. Okay? Because this is a 1 and this is a wave 2, ABC. And that 1 and 2, I'm not showing here because it'll be too many markings, but it's the higher degree of trend for which these ABCs and the white 1, 2, 3, 4, 5s are subwaves to. It is common for the bullwhip to occur, price to go back in, and then for it to come back out and do it again. It's what I call the needle and thread. It almost sews back and forth along the lower trend line 2, 3 times. I've seen it as many as 6 times. I think maybe even more than that. So I think that's what's really need to be looked out for. The fact that if we go below 26.92, we need to lower it maybe to a 0.86 retracement of this wave 1. But if it does go below 26.76, we've got a different count. We have a different count with respect to not only this 1 and 2, but this channel as well. Now, the bearish aspect of this is that the channel can look like a bear flag. Yes, that is the alternate count. So that is a bearish count. If this is the bear flag, you're going to see some volatility. Okay, price may decline down to the 2600 or so. But I don't think it'll be a situation where we'll make a new lower low of 2500 or less. The reason for that is primarily because of the cycles. We know that right now, this is the 5-week, 10-week, 20, and the 9-month cycles. We know that right now, the 5-week cycle is pulling the price down, maybe into the 19th of July or so. However, while the 5-week is pulling it down, okay, the 10, 20, and 9-month are pulling it up, okay, which is why I believe this is just a simple minor correction. And if that's the case, at around the 19th or so, maybe if this declines into then, this may generate a lower low down to maybe even the 2600 or so. If that's the case, I think it'll be just a matter of time before the 10, 20, and the 9-month pulls it back up. I have found the cycles to jive pretty well with the Elliott waves, and that's very interesting. And one thing about the cycles that often can be confusing for many is which one becomes the dominant. And it's like a baton being passed between the 5-week, 10-week, then to the 9-month, and then to the 20-week. It's not always easy to find which one is the dominant at that moment or for that trend. But there usually appears a dominant trend. And for me, the most dominant trend has been the 9-month. Then after that, the 20-week cycles. So if all of these reset and the 5-week is pulling it down, I think it'll be more temporary than anything else. And the rising 20-week, the blue, and the 9-month should have a very good lifting effect. All right, that gives the summary and the update for the S&P 500 index. Have a great day.